Greetings, fellow Rotarians and guests. My name is Joe Young, and it's my honor to serve as the 2020-2021 President of the Rotary Club of Columbus. Founded in 1915 with our first meeting in February of 1916, our club is one of the oldest and largest within Rotary International. Our membership includes a diverse set of leaders within business, city government, military affairs, healthcare, education, arts and culture, social services, and ministry, all sharing a common desire to improve our community and have a positive impact on the world around us. The world needs Rotary and the ideals that we represent now more than ever. The onset of the COVID-19 pandemic has dramatically changed the way we live, work, and interact with one another. School-aged children that were already struggling with food insecurity and educational development are falling further behind. Recent acts of violence perpetrated against African American brothers and sisters have further highlighted the fact that systemic racism continues to plague our nation. Political division and social unrest continue unabated. The world needs our leadership, and while these are extremely difficult challenges to overcome, Rotary is well positioned to be part of the solution. I long for the day when it will be safe for us to meet and fellowship again in person. Until then, please keep wearing your mask, please keep loving each other, and please keep serving others above yourselves. On behalf of my wife Vicki and our daughters Katie and Lynn, I want to thank you for all that you are doing to make our community a better place to live. It's my pleasure to serve alongside you. Now let's get to work. Greetings, everyone, and welcome to the July 8th meeting of the Rotary Club of Columbus. Whether you're joining us as a member or a guest, we're glad to have you here. I want to thank all of you for the calls and text messages and emails that you've sent me over the past week, congratulating me on my assumption of the presidency of the club. I appreciate your support of me and look forward to having this journey with you throughout the year. This week, our club mourns the death of Rotarian Ron Self. Ron was a member of our club for 38 years, and he was very instrumental in our feeding the hungry cans that are typically kept on the tables during our lunch meetings. While we aren't meeting in person for lunch and you've not had an opportunity to drop money into the cans, I think it's so important that we continue to remember this very worthwhile initiative whereby the money that we donate is distributed later to organizations in the community that are committed to providing food to people in need. So if you'd like to make a donation in Ron's honor, I think that would be very fitting, and you can contact Julie at the office to take care of that for you. We ask that you continue to remember Ron's family in your thoughts and prayers, and may his memory always be a blessing. Our Pledge of Allegiance this week is going to be brought to us by Sills and Emmett Mann, sons of Rotarian Laura Ann Mann.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Sills and Emmett, thank you so much for sharing the pledge with us. You guys did a great job. It has long been our tradition as a club to recognize a soldier each week for their service and sacrifice. Introducing our soldier this week will be Rotarian Pete Jones.
Of the Vietnam President Joe, fellow Rotarians, I'm Brigadier General Retired Pete Jones, standing right here in our plaza next to the three-quarter replica of the Vietnam Memorial. Here on a beautiful Tuesday morning, I'd like to introduce our soldier for the week, who is Staff Sergeant Moses Pond. Sergeant Pond was born in Washington, D.C. and graduated from high school from Bethesda Chevy Chase High School in 1996. And actually went on to graduate from the University of Missouri in St. Louis in 2001. He had a distinguished career as an archaeologist and a school teacher prior to that, where he actually taught English in China for a number of years. Upon returning from China, he enlisted in the U.S. Army on his 34th birthday as a 19 Delta. And he did his initial entry training here at Fort Benning as one of the initial movements of the OSIT, Armored OSIT and Cavalry from Fort Knox, Kentucky. He would go on and serve in the 10th Mountain Division in Afghanistan and would also participate in 2 JRTC rotations before coming back and being reassigned here as the school's NCO in 216 Cav. He also serves at the NCOIC of a great program that we have between Fort Benning and our local community, and that's our Partners in Education, in which he supports that with Blackmon Road Middle School since July of 2017. He's attended a number of courses to include the Basic Leader course, Unit Prevention Leader course, Med Pros, Advanced Situational Awareness Basic course, and the Master Resiliency Training program. With his BA in Anthropology, I'm sure he's a great Cav Scout and can see changes in the road before they happen. And he also has been awarded the Army Commendation Medal, the Army Achievement Medal, the Good Conduct Medal twice, and also the Afghanistan Campaign Medal. Sergeant Pond, on behalf of the Rotary, I'd like to present you first with another challenge toy to add to your collection.
Thank you.
And also a passport for the arts, which allows you and your spouse to go to events at the River Center, the Columbus Symphony Orchestra, the Columbus State University Theater Department, the Springer, and here at the National Infantry Museum. So on behalf of the Rotary Club, we'd like to thank you and all the fellow soldiers at Fort Benning for your service.
Thank you, sir.
The floor is yours.
I'd just like to say thank you to the Rotary Club. This is a wonderful opportunity. I'm very grateful.
You're welcome.
Staff Sergeant Pond, on behalf of our almost 300 members, I want to again thank you for your service to our country and to our community. We hope that you will join us for lunch at some point in the future when we're meeting again in person. Please extend our gratitude also to the other men and women that serve alongside you at Fort Benning. Thanks again. I'm looking forward to the day when we can meet again in person. The board is closely monitoring local statistics related to COVID case diagnosis, hospitalization rates, in an effort to determine a date that would be appropriate to come back to in-person meetings. We have sent out a couple of surveys to club members in the past, and response has been about 150 members have sent responses to those surveys. We're going to send a third survey this week that will come from an email from the office, and I hope that you guys will complete that information to help aid us in our decision. We're currently targeting July the 29th. Certainly that can change, but we appreciate the feedback that you guys have been providing, and we will hope to move toward that day soon. Since we aren't able to meet in person, I think it's so important that we continue to take advantage of these virtual fellowship opportunities, not just the online Wednesday programs, but also fellowship opportunities such as online happy hour. We had one of those on Thursday of this past week. On Monday, we had Rotary Poker. That's an ongoing, friendly, fun game. No money changes hands, and that's happening every week. I think it's critical that we continue to touch base with each other. I would task each of you to this week, pull out your Rotary directory and call at least one or two members that you haven't spoken to in a while and let them know that you miss them. Call your table mates, see how they're doing, and let them know that you're looking forward to the day of fellowshipping with them in person again. But in the meantime, let's make sure that we're taking care of each other as much as we can from a distance. We've got an exciting program today. It's my honor to bring in past President Tyler Townsend to introduce our speaker. I want to remind everybody that's joining us via Facebook to post any questions that you have in our speaker within the comments section of the Facebook feed. But Tyler, if you will enter our speaker, thank you very much.
Thank you, President Jeff. On behalf of the Rotary Club of Columbus, Georgia, I'm excited to introduce today's keynote speaker, Dr. Raphael Bostic, President and CEO of the Federal Reserve Bank of Atlanta, Alabama, Florida, and Georgia, as well as parts of Louisiana, Mississippi, and Tennessee. And in addition to overseeing the bank's activities, President Bostic is also a rotating member of the Federal Open Market Committee, which helps to determine the interest rate levels that affect us all. Born in New York City, President Bostic graduated from Harvard University with a combined major in economics and psychology, and from Stanford University with a doctorate in economics. President Bostic, thank you for joining us today.
Thank you, President Tyler. It's good to see you, and it's good to see everyone. I wanted to first say thank you for having me here. I appreciate the introduction. I actually really like short introductions, so I'm very much grateful for that. And I also wanted to offer my congratulations to President Joe for assuming the presidency for the Rotary. It's a great honor. It's a great organization, and I'm really glad to be here. I wanted to say that I am a Rotarian, so I'm especially happy to do this because it means that I can do this meeting instead of having to go to mine as well, which happens on Mondays. So I didn't do that one. I'm here with you today, and I'm really pleased about that. And as I was looking at some of the feed, it just occurred to me that I'm not in my usual Rotary dress, so please forgive me for that. I'll remember that the next time I have to do one of these things. The other thing I wanted to say is that, I do a lot of these Zoom calls. This becomes something that's a bit of a regular program for me. But this is a new one in the sense that it's a Zoom to a Facebook feed that then goes to you. So it's a feed to a feed. And it really, in some ways, makes me feel like I'm an anchor on a news show. So we'll see how I do with my program management and how we move forward. So what I would want to say here also is that I'm going to talk for about 15 to 20 minutes, give you a sense of what I'm seeing in the marketplace and how things are playing out, and also give you a sense of the things that I'm thinking about moving forward. And I'm really interested in having a dialogue and an engagement with you. I should also say at the beginning is that everything I'm going to say here is just my view and my opinion. And doesn't necessarily reflect the views of the Federal Reserve Board, the FOMC, anybody in the system. You're just going to get what I am. So with that as the introduction and opening, what I want to do is just start at the very, very beginning of the episode and the crisis that we've gone through, just to sort of make the point that what we're facing now is really something that is quite unprecedented relative to what had to experience in terms of normal business cycles. And the reason is that this is a public health crisis at its heart. And the recommendation to dealing with that public health crisis has now triggered economic impacts that we are all dealing with today. And I spend basically all my time now trying to manage. The public health response to deal with the crisis was clearly to minimize personal proximity, to experience social distancing, and really to try to reduce the pace at which the virus spreads through the population. And that response really is going to do a couple things. First, it's going to introduce significant cash flow challenges to businesses. It's going to introduce significant cash flow challenges also to families, households, nonprofits, and as we're seeing more and more governmental organizations. And all that introduces a lot of stress. One other possible impact of this is that if you don't have cash flow, you may choose to tap into credit markets. And so there could be a particular rush to credit. We actually saw that at the very beginning of the crisis. And the challenge is that if there's too much draw on that can put pressure on banking institutions and indeed our entire financial sector. And so given all of this, what's happened is that we've seen a massive response by policymakers to try to really minimize the negative impacts of the virus being here, with the goal, to my mind, trying to preserve as many fundamentals as we possibly can. Now, if you remember, right before the virus got here, we had an economy that had been growing for almost 11 years. Unemployment was at record and historic lows, and inflation was not something that was a major problem. All of these things suggest that we had good, strong fundamentals in the economy. So for me, the whole measure and the objective of the relief that's gone on is really to try to preserve as many of those fundamentals for as long as possible, so that hopefully when we get to the end of this and we start to move to a more normal position, we have a lot of fundamentals, a lot of strength to draw upon, and that recovery can be robust and it can be powerful, and we can get back to where we were as soon as we possibly can. So now thinking about the responses, the Fed, my group, we acted bold and decisively right from the very beginning. We lowered our Fed funds rate to basically zero, and we introduced a number of facilities that were all designed really to enhance the basic functioning of markets. And many of them were financial markets that businesses and others use to raise capital and to continue to be able to do business. Because if those things break down, then that's going to have a cascading effect to the rest of the economy. I'm pleased to say that those facilities have pretty much done their job, in the sense that a lot of the stress pricing that we saw has dissipated. We have still some elevated spreads, but nowhere near the levels they were at the beginning of the crisis, which has meant that businesses can still raise capital. They can go to the debt markets and corporate bond markets to raise funds, and that's been a very good thing. We've also stood up some facilities to provide some support also to particular segments of the economy. We are adding liquidity to the Paycheck Protection Program, and then the Main Street Lending Program is something that we're rolling out now as we go through the development of that. Now, I want to say just one thing to be fully clear here. We've done 9 in about 8 weeks or so in terms of announcing them and getting the public understanding what was going to happen. This is a great contrast to what happened during the Great Recession, where it was on the order of quarters and indeed years for us to get just a couple facilities out. So we've taken that experience and we've put it on steroids to make sure that we have as muscular a response in terms of relief as possible. I've done a couple other things that I like to talk about because there's a lot of attention that's given to Fed funds and also to the facilities. But we also have a significant role in payments. And I will just tell you that all those $1,200 checks, those economic impact payments, the vast majority of those were run through Federal Reserve facilities that actually run out of the Atlanta Fed. And also, in this time, we've seen a spike in the demand for cash. And so my cash processors, the folks that put together the orders for banks, have been working round the clock at elevated paces to make sure there's enough cash in the system. So that's something that people don't have to worry about. The last thing I would say for what we have done as the Federal Reserve is really emphasize the fact that we are a bank regulator. And so we've been engaging with our banking institutions and really trying as much as possible to encourage them to be a strong pillar of a solution approach. Get that capital out, work with your customers to find some ways to forbear or maybe restructure some of the lending. And by and large, the banking institutions have really stepped up to that, and I'm really grateful for that as we move forward. Now, that's on the Fed side. There's a whole other side to policy, which is quite important, and it's actually important because it can do different things than what we can do with our authorities, and that's the fiscal response. So there have been waves of legislation that have come out. The CARES Act is the one that people are most aware of. That's the impact payments. That's the PPP program. And there's also, but I do want to say there's been also other supports to individual sectors like hospitals, restaurants, and airlines. The trucking sector has gotten some support. And the idea behind almost all of the support is to be as broad-based as possible. Get support to businesses, get support to families and households, get support to nonprofits, and also get support to government. And one thing I'll say is the evidence that I've seen so far has been quite positive in terms of this relief has really helped. We've done a number of surveys of businesses. We have a large survey function, and the businesses say that we've gotten PPP money and it's allowed us to stay afloat and be more active than we would be otherwise. We also know, just from looking at data, that suggests that the economic impact payments have made a big difference. Right at the beginning of this episode, there was a lot of concern that the loss of cash flow for families would mean that they wouldn't be able to pay rent, they wouldn't be able to pay their mortgages, and we would get a lot of eviction and foreclosures. And frankly, that just hasn't happened. Indeed, I was looking at some data for the city of Atlanta just yesterday, and the pace of evictions has gone basically to zero. And I think part of that is certainly the checks, but also the unemployment insurance, which has kept cash flow moving into families and allowed them to spend the money in ways that allow them to not have the worst impacts as we move forward. So I think there's been a lot that's gone on, and that is something that is important. And that really brings us to today. And so, in thinking about how to describe today, I actually been thinking a lot about a talk I gave actually to the Rotary in May, to the Atlanta Rotary, my Rotary in May. And I talked about sort of at that point, what's the big picture moving forward? What are the things that need to happen? And I pointed to a couple of things. First, that we need to reopen incrementally, but with an appropriate level of caution. We couldn't be closed forever, but if we opened in a way that is not so conservative, it's possible that second wave could come and a spike in infections. And that links to another thing that I think is quite important, is we really need to heed the advice of public health officials and respect the notion of social distancing. And in the interim, since that time, I've talked to many health officials, and they say social distancing is one of the most effective ways that we know to reduce the spread of that virus. A third thing that I would say that is really important is that we need to enhance our testing and distancing protocols. And we need to do this because the public needs to be confident that when they go out, they're not putting themselves and families at risk. And one thing that it's really important for all of us to be mindful of and remember is that the U.S. economy is based to a large extent on the degree of confidence that each of us has as a business leader and as a consumer. Because if we don't have confidence, we're not going to make those longer term investments, and we're going to play much more of a wait and see attitude. And that means the level of activity we'll have from an economic perspective will be lower, and the trajectory of our recovery will be flatter. So we need to acknowledge that confidence issue moving forward. And then the last thing that I mentioned at the time is that we need to continue to monitor all the sectors of the economy and then find out places where relief is still needed and then stand ready to offer relief in that instance. Because as I said, we're trying to preserve as many of the fundamentals as we possibly can. And so we need to find out where relief isn't getting, because that leaves the potential that some of those fundamentals may be lost in a more permanent standing. So the question is, how are we doing on all of these things? And I have to say, right now, the evidence is fairly mixed. I'm sure you all have read news reports about spikes in terms of infection rates in markets across the country. These are things that what I've been hearing from business leaders and from consumers is creating some concern about how quickly and how robustly a reopening is going to play out. And so we need to continue to monitor that, and I will continue to monitor that moving forward. In terms of monitoring sectors of the economy, we are at the Federal Reserve doing a lot of outreach to try to talk to business leaders, talk to families, talk to nonprofit organizations and governmental officials to get a sense of where there are still weaknesses, where some of that relief may not have gotten the first time, which might leave some in a much more desperate standing, and where there may be relief that's needed moving forward. So as one example, we know that the PPP money got to a lot of businesses, like a lot of them. But one group that didn't get as much were the very, very small businesses, those that have maybe from 1 to 5 employees, or maybe not even 0 employees, may not have had relationships with banks that would have allowed them to quickly get into an application that would go to the SBA. So that's one area. Another area where we're seeing a more slow recovery is going to be in hospitality and hotels, in restaurants, those businesses that are necessarily public facing, but that also require some degree of social congregation. Those places are going to struggle. So we're continuing to do that. There's another concern that's on the horizon that I've heard from many, and that's what happens when a lot of these relief efforts expire. So we know that the unemployment insurance is supposed to end at the end of this month. We know that the $1,200 checks went out a while ago, so the likelihood that they've been spent is relatively high. And things like the PPP, which was originally an 8-week program, has been extended to 24 weeks, which business I've talked to has said is a helpful thing. But 24 weeks is still a finite period of time. And there is some feeling that this is going to be going on a bit longer than maybe we expected at the beginning. And so there's a lot for us to do. We're going to continue to stay very busy and vigilant to try to be on top of what's happening across the 6th District and indeed across the country as we try to navigate our way through this very uncertain time. So I'm going to stop there. And I know there's going to be some questions that will allow us to fill in. But what I would do is just ask that we put up a slide on how to stay in touch with us. Because one of the things I think that is so very important is that we get information, the information that we have, to leaders like yourselves and to community pillars, so that you have that information and then can spread it around and make sure that everybody is aware of what we know. Because that knowledge, we're working really hard to get real-time knowledge to supplement the information that's coming in from more national sources. That can be information that can guide decision-making, both at the household and at the family level. So do subscribe to our newsletter. We showed you how to do that. Follow us on social media. So it's at Atlanta Fed, or you just, for me, is at Raphael Bostic. And I would really encourage you to do all those things. Stay in touch with us, and please do consider the Federal Reserve Bank of Atlanta as part of the circle of information that you draw knowledge from. So let me just stop there. I think we're going to go back to Tyler, who's going to moderate the rest of this conversation. So Tyler, come on back to the screen. Or Cameron, are you doing this?
Yeah, I'm doing this, President Bostic.
All right, Cameron. There you go.
Good deal. Thank you for your leadership and for your time with us today. I do want to point out, I think our Rotarians may have seen you in the drop in the microphone here in the Wall Street Journal yesterday.
I was in a mood that day.
Yeah, it was great. It was an essay on the moral imperative to end racism and the toll that systemic racism has on the economy. And we just want to thank you for your bravery. Not only was that an important essay, but it was brave. And your leadership is much appreciated and very important right now and always.
Well, thank you very much.
Let's get into some questions here. We have them coming in from our Rotarians. The first I want to ask is, we know the Fed sets monetary policy, but not fiscal policy. If you could wave a wand and do one thing about fiscal policy and legislate, what's something you would do immediately?
So you went straight to the hard question here. So here's what I would say. We don't get to do fiscal policy, and I'm not privy to a lot of the conversations that go on in the halls of the Congress. What I would say, though, is this. I do worry about small businesses, the smallest of the small businesses. They're important in many communities across this district, in a lot of small towns. And that's a fabric of the U.S. economy that I think we really need to make sure we don't lose in large measure. So that would be one thing I would think about. Another area that I think is important to think about support is those sectors where we think the recovery is going to come a bit slower, because if we just turn the spigot off in terms of getting relief to those families and those businesses, the losses that we've seen thus far, which have been substantial, are going to become permanent losses. One of the things that is really been important is that when we implemented the shutdown, we knew the economy was going to contract, and we knew it was going to be bad. We knew the numbers were going to be bad. The question, though, it really became sort of how should we think about the relief in terms of allowing many of those job losses to be temporary rather than permanent. And so as this goes on longer and longer and longer, the likelihood that some of these job losses are going to become permanent goes up. And that's one of the things that I think we definitely need to think about when we look to where relief might be best deployed.
Well, on that note, what trends do you anticipate for that employment recovery? You mentioned permanent job losses, but what about the changes in the future of work or the skills or education required moving forward?
That's a very interesting question, and it's a difficult question. So, because there are so many moving parts. On one hand, you Cameron, you mentioned some of the structural changes, right? So that I was talking with some business leaders earlier, like some bankers earlier, who said, the COVID crisis has put stress on us, and it's caused us to think about our investments and maybe accelerated the pace of some of the changes that we were going to do anyway, that have implications for how many jobs you need and what kind of jobs you need. I've talked to business leaders, say in restauranting, who said, we may have been in an overcapacity situation, and the virus is now going to trigger sort of a reshuffling of the entire sector. So we may wind up with 10 to 20% fewer restaurants as we look forward. And then, I think about what we've done in terms of the role of technology, right? So, we're the Fed, so we're not at the cutting edge of pretty much anything. But what's been useful for us was the COVID introduction has forced us to think about and rely on technology in ways that I don't think we would have been comfortable doing at this scale before. And it's given us a different understanding of the types of things that you can do remotely. And it's changing our thought about how many people we need to have in the building, how much work can happen remotely. And that is also a very significant structural change. Let me tell you just one story. I was talking with a hospital administrator, and he was saying that this COVID crisis has increased the level of their use of telehealth by like 10 times. They were at like 3% before, and now they're at almost 30%. It's made them rethink the need to build a parking structure. They're like, now we're pretty sure not that many people are going to need to come to the hospital, so we can change our whole investment structure moving forward. So there's all these things going on at the same time, which makes it very difficult to know what the trajectory of jobs is going to look like in that medium term. I'm still hopeful that a lot of the jobs that have been lost will turn out to be temporary. So, 22 million about in April and May. We've got 7.5 back now. I'm hopeful by the end of the year we can have a great many of those back. And we're going to just sort of pay attention to how things evolve, and we'll change our expectations as we get more information.
Yeah. So what do you think the most permanent change in your job might look like as a result of this?
Yeah, I think this is it right here, in the sense that, I do a lot of public speaking. I was doing a lot before, but what was required in those days was I had to get on a plane, or I had to go on a 2-hour drive and do all those sorts of things, which meant that just from a logistics perspective, the ability for me to connect with and contact and talk with a lot of other people was just less. And now I'm doing, 3 or 4 of these a week in a way that just wasn't possible before. And so it's going to change my ability to like get my messages out and my understanding to people. But the other thing that I'm very sensitive to is it's very different to have a Zoom conversation than to be sitting next to you at a lunch table and being able to talk. So we're going to try, my team and I are going to try to figure out, how do you find that balance so that we can continue to have the interpersonal conversations and have the deeper connections that are so important for helping my understanding of how the economy works, but at the same time trying to get in front of as many people as possible, so that there's less uncertainty about some of the things that we're learning.
Great. All right, here's another one, and this may be a tough one. It appeared as though the massive stimulus provided by the Federal Reserve helped save the economy and the stock market. And there's talk that the Fed is going to continue to support the economy through the pandemic. Is this giving policymakers cover to push forward with aggressive reopenings in ways that are not supported by the CDC and by health experts?
Oh, so that went in a way I wasn't really expecting. So, let me step back and say first, in terms of our relief efforts, for me, it was important that we go full in early to try to provide support for as much of the economy as we possibly can to keep those fundamentals strong. And I think that is clear and is direct. And the basic idea for me was that if those stay strong, and then we take care of the public health issue, by the time once that's taken care of, then we're good to go. We got an economy that's well positioned to just take off and move forward. The complicating factor and the unknown that we had was, how is reopening going to go? And was it going to go in a way that we would be in a place where we're comfortable that we can just take off? And, to the extent that that doesn't happen, then the horizon for when we need support is extended, which then means the nature of our support is going to be interpreted differently. I was pretty hopeful at the beginning. I think that, just from hearing from business leaders and others, people are getting a little nervous and a little concerned that we're not seeing a smooth trajectory and that we're seeing ups and downs in ways that might suggest that that recovery is going to be bumpier and harder. I don't think our policies have triggered that at all. And in fact, when you hear people talk about this, almost none of them say, well, we should get going because the Fed has a facility, right? They're talking much more at a fundamental level about we can't stay closed forever, and so we need to move forward. And frankly, we've seen in this country, we got 50 states, we got 50 different approaches to how to do that. And one of the things I'm hopeful for is that we'll learn in fairly short order those places that have been most effective and draw those lessons out and have them applied more broadly.
Yeah, what do you hope policymakers and the rest of us learn from this crisis?
Well, there are a couple things. So one is that we're all in this together, right? So one of the aspects of this crisis, which has been different than, say, even the Great Recession triggers, is that this wasn't just one sector. This wasn't one part of the economy. It wasn't a couple of actors who are making risky decisions. This is something that hit all of us. And really, to me, sort of emphasize the connectivity that we all have with each other, and really says that we need to be thoughtful about how our actions have impact in the positive and the negative, potentially, with all the others around us. And that's a lesson I think that is really important. And in all the discourse that we've had, sometimes I've despaired a little bit because it seems like they're still finger pointing, I guess, you guys and us guys. And it's really all of us together. And I think if we have that lesson and that becomes an enduring outgrowth of this, I think that'd be extremely positive. The second thing I would say is we need to really understand that the public health aspects make this different. This is not a garden variety recession. And because of that, I think our thinking in terms of sequencing of policies needs to be different, and really approach this as a really special case. Hopefully a case we'll never have to see, a situation with so unprecedented. I don't have mathematical models or economic models that explain how people behave in a pandemic, right? Which makes my job a lot harder, which makes my team's job so much harder. So I'm hoping we don't have to go through that again, but I hope we do draw out some of the lessons about our collective interest in success, and also the important role of technology, and that we can still do a lot of things because we've positioned ourselves in such a positive way.
Yeah, you hit on something there. What can we do to make the economy more resilient to these shocks? We call them shocks. Something unexpected and damaging seems to happen every 10 years or so, even though this is, as you said, of course, brand new and different from the traditional shocks, as we call them.
Yeah, so resilience is, so it's interesting. Our bank has taken on as a strategic priority improving economic mobility and resilience. And it's funny that you asked the question the way you did, because when we started talking about this, we were much more focused on the mobility side and not as focused on the resilience side. And they're really not the same, and the things you need to be resilient aren't exactly the same things as you need to be mobile, economically mobile. And so we're rethinking about this at a bank in terms of how do we rebalance our emphasis of these two these two aspects of an important. And so what I would say is this: one, I think we need to really pay attention to our relationships, right? So I mentioned earlier businesses' relationships with banks, and recognizing that there's an art to this, and that it may be in our interest to be willing to sacrifice some short run in the aim of promoting a more resilient long run. A second is that we all, I think, would do well to become much more agile in our skill set and our willingness and adaptability to change. Because as you noted, Cameron, change seems to be coming faster. And if it comes faster, we'll all be better if we are more adaptable and more able to respond in real time to how things move. We're actually on an agility journey at our bank. That's one of the reasons why we can do this technology so well, but it's a struggle because it is a very different mindset relative to sort of where we've been. And so I think those two things, becoming much more adaptable and much more agile, it's a really an important part of this.
Excellent. What do you think in terms of the cases rising, and do you see more shutdowns coming? Do you see, what other stimulus might we need?
So the cases rising has been interesting. I think, so let me say one thing to start. I don't think we'll see the same sort of blanket shutdown that we saw before at the very early stages of this. I think we've learned some things, and we have some information about where the spread of the virus is more likely. So I think we're going to see more targeted constraints. And I think you're seeing this in Texas and in Florida in terms of their selective decisions about what types of enterprises need to close and the like. I think that's more of what we're going to see. I do worry significantly about what those things do to the collective psyche of the consumer, though, right? So if consumers, particularly people of my vintage, where getting the virus is actually a serious deal, if we are then sort of retract a bit, that has some troubling implications for what the trajectory of recovery looks like. And so, I'm hopeful that we're in some kind of adolescent stage in terms of how we're responding to this, where we're sort of growing and evolving and we're learning, and that we're quickly going to get to a place where we have a sort of a more general understanding about what's required in terms of wearing masks, staying socially distant, and also in terms of our connectivity to people who are most at risk. Because for me, one of the biggest issues is not whether young people are getting it, but if young people get it, are they going to then go visit their grandparents, right? And it's like, who else do they talk to? And that's some of the real risk about this becoming a much more painful experience. So I'm an optimistic person by nature, so I'm just going to say that, and I'm just hopeful that that we have this learning that happens quickly, so that we can get the trajectory and the trend of the infections more under control.
Yeah, I think that's sort of keeping with the the truism that every generation probably thinks the next one is going to be the end of everything. That's great. But thank you for this incredible insight. I know this has been valuable and helpful and encouraging in many ways to our club, our Rotarians. And we just thank you so much for taking the time to spend with us today, answering our questions, and for your continued leadership in our country. So,
well, thank you, Cameron. It's great to be here. I want to thank all of you for the service that you do. The Rotary is a great organization, and I'm proud to be in fellowship with all of you. So thank you.
Yeah, thank you. President Joe, back to you.
Thank you, Dr. Bostic. Again, I want to echo Cam's comments and thank you for sharing your thoughts, your insights with us. We appreciate all that you and the team at the Federal Reserve is doing to keep the economy strong, keep the wheels of commerce moving. It is our custom as a club to donate a children's book to our local library, Columbus Public Library, in the honor of our speaker. And we're so happy to be able to do that today. We'll be donating a book inscribed with your name. So again, we appreciate you so much. And Thanks again. We hope that you can join us again at some point in the future.
I look forward to it, and hopefully I can do it in person.
That would be fantastic. The invitation is open to you. I want to remind everyone tuning in that we have a replay of today's meeting that will be available on Facebook at the conclusion of the live video, as well as we'll have a YouTube presentation that will be available later as well. Want to invite everybody to join us next week, where Nikki Dutton will be joining us to talk about her work with the A21 campaign and how they are combating human trafficking during the COVID pandemic. So please join us for that. As we wrap up, I want to once again remind you to wear your mask, do your part, make sure that you're loving each other, make sure that you're serving others above yourself. This concludes our meeting.